Alright, so I definitely understand that for most people, say 95% of the population, give or take, they probably don't ever use spreadsheets. In their job or their day-to-day life, it just doesn't factor in. For traders though, I'm not going to say it's mandatory. I'm sure there are some people out there that are successful without them. But spreadsheets can be a very powerful tool if used correctly. They give us structure for more clearly defined rules for planning trades. They allow us to have a much clearer picture on things like allocation sizing, max gain and loss, distance to break even points, stop gains and stop losses, and many other components of a successful trade. It's also just critical to have a trade log so we have something to go back to and analyze our history. Becoming a successful trader is really a matter of trial and error. We just focus on doing more of what's working and less of what isn't. And if you do that for long enough, just making small improvements along the way, what you end up with long term is a market crushing rate of return. So I'm going to go over the spreadsheet for the VTS Iron Condor strategy so everybody knows what it means and how to use it. And if spreadsheets are new to you, please give it a chance. You may actually surprise yourself. Okay, so first of all, if you haven't downloaded the spreadsheet yet, you're going to go to lesson 1.3 in the Iron Condor course. You can scroll down to the blog section here and read this, but essentially you're just going to follow these download instructions. It's pretty basic. You just need Microsoft Excel on your computer, and then you go to the download link right there and you download the spreadsheet and everything should work just fine. So once you get that on your computer, it's going to look like this. Now the first thing I'm going to do here on the first pass is I'm just going to review all of these columns here and just show you what they mean. Now, of course, all of them are labeled as well, so it's fairly self-explanatory, but it can't hurt to just review it. So we'll do that once, and then I'll actually go into the software and I'll open up a new trade, and we will actually input this one again in the spreadsheet, and I'll show you how to do that. And then lastly, I'll just highlight a few of the more important details here in the rules of engagement that I've listed out. All right, so the first column that you will see, of course, is this one that says win-loss open. I always mark this column here so I can see it at a quick glance. I'll mark it in blue when I'm planning to take a trade, but I haven't actually done it yet. Yellow, like you can see here, is a trade that's already opened. And then after a trade is closed, I'll either mark it green or red, depending on whether it was a winning or a losing trade. Once you get your 25 trades done, you'll have a pretty good list there. And of course, we're hoping for a few more green than red. The next one is the trade type. This comes into play because sometimes we use Iron Condors and sometimes we use calendars. I'll explain later on in the details here how we filter for those trades, but there's two types that we use. The open date is just the date that the trade was opened on. The ticker symbol, of course, in this case, the SPY, but sometimes we'll trade other asset classes as well, maybe bonds, maybe gold. So you'll just write the ticker here. Net liquidation value, of course, this will be in your account. This is the total value of your entire account. And this is how the trades are actually allocated for sizing. Because option trades are more capital efficient than buying the ETFs directly, we can't size based on a portfolio allocation. We actually have to size these trades based on the risk reward of the entire portfolio. So you have to enter that number here. Available number of trades is just how many layers of Iron Condors I am prepared to open. So you can see 2. Once the community gets more used to these, and especially if you like Iron Condors yourself, you can actually ramp this up. Like I said in here, there's nothing stopping you from doing 5 or 6 layers, and you would just make sure that each one of them is a small allocation. That's one good way to get diversification, is just add a bunch of layers and then reduce the allocation size. Next is just the open price. This would be the price of the SPY in the moment that we opened our trade. Expiration date, fairly self-explanatory. You're just going to look into your software and it'll tell you the date. Of course, the days to expiration, it'll give you that as well. And then we've got a bunch of volatility metrics here. So of course, the VIX index. I don't particularly like the VIX index. I don't use it for hardly anything, but I always input it anyway just to have the history. It's always good to know what level the VIX was when we're opening these trades. One of them you could focus on a little bit more is the current IV percentile. This is the implied volatility percentile over the last 52 weeks. I'll show you in the trade software in a second where to find this number, but you can see it was at 48% when I opened this trade. Now, if you're filtering for volatility, of course, I would always default to the VTS volatility barometer. It's by far the best, most comprehensive volatility measure out there, and it can be used effectively to filter out these trades for when we're going to be doing condors or calendars. Next is the delta. This has to do with strike selection, and you can see I said about 0.15 delta on both sides. I'll show you in the example later how I scan for that, but basically we just look for the 15 15 delta strike and then move slightly further than that. Calendars don't have a delta because calendar options are done at the money. So this will always just input for you. It's just going to have an NA there. Next, you'll input the strikes. So for an Iron Condor, there are 4 legs to the trade. You're going to write in the long put, the short put, and then on the other side, the short call and the long call. For calendar spreads, they don't have calls, so you're just going to be inputting the put options. And then, of course, importantly is the open premium. This is the price that you actually got when you opened your trade. And this premium and these contracts are used to size the trade. So if we look in the number of contracts here, all you do is adjust the number of contracts until the maximum loss for the trade is slightly below the trade allocation. Of course, we always want to round down to the nearest option contract. So the trade allocation is inputted already. This is based on a percentage of the portfolio, 3% for Iron Condors and 2% for calendars. And you just adjust these contracts until this number is smaller than that one. So for example, if I were to have done 21, you can see 8,000 is a little bit too many. I'm only allowed 7,700. If I did 19, well, then it would be too few. Now, everything in gray is automatically calculated for us, so you don't have to do anything with these columns. These are just giving us further information about our trade. Probability of success, the distance the SPY has to travel to the short put and short call strike, and then very important, the stop losses, they are also calculated for us as well. And in here, it's going to actually tell you what these are based on. You can see condors and calendars will have a different stop loss. It's a different risk-reward profile on these trades. Calendars are even more capital efficient, so we can't allow them to go to the 50% level. They only go to the 25% level. But this is all calculated for you, so when you drag one of these rows down here, we're going to be able to see right away what our stops are. The 4% movement threshold, this is essentially for when you're trying to layer a second trade. Of course, there's no reason to put a second trade on if the underlying price hasn't really moved that much since when you put the first trade on. That would be redundant. So I like to wait for some significant movement before I consider adding a second layer. Otherwise, I'm just going to use a different expiration and it would be a totally different trade. But for example, if I was going to look to get on the SPY for this expiration date in the same cycle, I would have to wait for the underlying SPY to make a significant movement first. If it clears 425, then I could consider putting a second one on. And then after this break, of course, this is all the stuff that you need to know for when you close your trade. And this is very simple as well. It's all calculated for you. Just put the close date, the date that your trade was closed on, the price that the underlying security was actually trading when you closed it. This is just useful for later on if you can see where you opened it and then you can see where you closed it. It's another data point to see how far it has moved and perhaps why the trade either made money or lost money. And then input the close premium. Whatever number that is, it's all calculated over here for you and we'll have our information. So the number of days that it's open, this doesn't look right now because there's no date here. But if I were to say, for example, let's say we close the trade right now, that's pretty soon. That's only 8 days since we opened it, but it will subtract those dates for you when you input it. Trade fees, this is actually based on my Thinkorswim trading account. So whatever broker you use, you can go ahead and adjust that formula if you like to reflect the fees that your broker actually charges you. For Thinkorswim, the fees aren't the cheapest, but they're actually reasonably competitive these days. So I have actually inputted that formula for everybody. And what it essentially is, upfront transactions are basically free these days, but you still pay for the option contract. So that's what's being reflected there. 65 cents per option that we open. That is a little bit high. You can certainly get 0.25, 0.4, 0.5, but 0.65 isn't as bad as it used to be. 10 years ago, TOS was basically unusable because the commissions were so high. But all brokers these days are in the race to zero, so they're all competitive. Trade fees as percent of maximum loss. This is essentially just a data point. There's nothing we can do about it. We need to be trading. Of course, you should reduce fees whenever possible, but we just pay it and it's part of trading. And then there's different ways to look at the profit. So first of all, the trade profit itself in a dollar amount, then the return on capital. This is actually reflecting the profit that was made compared to the maximum loss. So this value here, the profit that the individual trade made. And then the return on portfolio is how much this trade contributed to the overall portfolio. Now that's an important number because in the future, when you've got your 25 trades done, you're going to be able to see the impact that this strategy is having on the rest of your portfolio. If it's too small, at that point, you can increase the allocation size. If it's too large and you feel like this strategy may be either dragging you down, or maybe it went really well, but you can see that in the future, if it did go badly, it would start to cost you. Then maybe you'd start reducing that allocation size. But we won't really know until you have a bunch of data points. We're starting with 3% on the condors, 2% on the calendars. I know that's an appropriate number, but once you get your trades done, you're going to see that as well, and you're going to be able to adjust it to what you do. So this trade listed is actually the live trade from the VTS options portfolio. This went out on August 2nd, 2022. But now I just want to show you how to open a new one. This is not going to be an actual trade that I would want to open. Likely in our official portfolio, I will probably wait about a week. But if I did want to open a new Iron Condor, the first thing you would do in your Excel is you just copy this cell and you just paste it down here. And when you do that, all of the cells that are in gray, they're all inputted for you already. And then every time you see a blue cell, that means that you actually have to input something into that cell. So the first one, like I said, I typically will turn these blue just to indicate that I'm actually doing a new trade. So if I were to open a new trade on the 10th of August, 2022, on the SPY, here's how we would do it. So first of all, we actually need a trade to simulate. So I've got one down here. Again, this is not a trade that I would take today. This is just an example. But the first thing is the net liquidation value. So I could say 265,500. The open price is the open price for the SPY, which is 418.63. The expiration date that I'm choosing here is the 21st of October, 2022, with 72 days to go. Again, that's a little long. I'll probably wait about a week, but it's just an example. So 21 October, 2022. 72 days to expiration. Now we will input the volatility data. So the VIX index, first of all, VIX index 2003. So we can input that. Current IV percentile, I told you I'd show you where to get that. So in Thinkorswim, of course, your platform might be different, but I would imagine that there is some way to find it. You would just type the ticker that you're actually trading in the Analyze tab, and you're going to go all the way to the bottom. And then down here, it actually says today's option statistics. You'll just open that one and it's going to show you right there the current IV percentile. Again, what this number is showing is where the implied volatility is right now compared to where it has been in the last 52 weeks. So 1 year. You can see the lowest it's been is 0.096 and the highest was 0.368. Right now we're at 19.43, which is actually reasonably low, especially given that the market was at its bottom no more than 6 weeks ago. So we can enter this 36 there. The volatility barometer today was at 42%. Of course, you're going to get that in the daily VTS email if you're a subscriber to VTS. If you're not, I would default to current IV percentile. And now we just have to input the strikes for our trade, the premium, and the number of contracts. So the strikes, for that, remember we're looking at the delta column. So I would actually go in, this is the trade right here. I'll close that just so you can see it. Here's the one that we're potentially doing, 21 October 2022. And remember, I'm going to go to the 15 delta, and I'm just going to scroll for one further than that. So here we are at the money. This is the delta column right there. You can see 0.47, 0.46. I'm just going to go down until it says 0.15, and then I'm going to try to find the high volume strike near the 0.15 delta. You can see this volume is significantly higher at 375 than it is in any of these other ones. So for the SPY, I'll trade the 375, 370, 365. It's just a higher volume strike. So I will short the 375 and I will buy $5 out of the money. And then on the call side over here, delta is this column. Again, I will just scroll down. I will find that 15 delta and I will find the highest volume strike just outside this, which as you can see, it's the 455 strike. That's going to be a 14 delta. Close enough. 455, 460. So now I'm just going to input those. 370, 375, 455, 460. The current premium is $1.20. Okay. Now this is the part where we input the contracts. So you can see based on my net liquidation value, I have just about $8,000 to allocate to this trade. So like I said, just put any number in here and ballpark it. So 5,700, not enough. Let's go to 20. 20 got us close. Let's see if we can get one more. 79.80 compared to 79.65. So that is razor close. There's $15 difference there. So as I said, we always round down. And I am a quant trader and I follow my rules. So $15 is $15. That is too much. So I'm actually going to drop it down to 20 contracts. And that is it. So I would put this at 20 and then I would go ahead into the trade tab and I would execute that trade. Like I said, I'm not going to do it right now, but that is what the trade would look like. This one right there. I could put these at the break evens if I wanted. Another thing that I like to do is I like to go over and look at the stop losses, and you can see that it's $1,200 on both sides of this trade right now. So what I will actually do is I'll just go ahead and find something near 1200 and I'll put the hash lines on there, just representing where the stop losses are sitting. Here's the current price right there at that gray hash line. So every day that I check this trade, I just have to make sure that it hasn't stopped out, either stop gain or stop loss. If it's up 1200, I'm closing it. If it's down 1200, I'm closing it. So assuming that I just executed that, remember it just takes a minute or two. The last thing that I would do is I would turn this yellow, meaning that it's a live trade. And now every time I look at my spreadsheet, I can just see if I have live trades or not. Because remember, we have multiple different option strategies. This spreadsheet is just for the Iron Condor strategy. But if you have 5 or 6 and you're just going across the page and looking for your trades, it's easier to find them in a spreadsheet than it is to go here and try to remember, oh, I had this trade or that trade, or go into here and try to determine which ones of these are options and which ones aren't. I actually just like to go into the spreadsheet and I can see it clear. And I could just click to the volatility step. I could go to volatility trend, go to my earnings plays, lotto ticket, calendar roll. Whatever strategy I have, I'm going to see at a quick glance whether the trade is open. So that's it. Now that did take a few minutes, but trust me, when you're doing it live and you get a little practice, this process really is probably less than 5 minutes. And that includes executing the actual trade. You don't have to hurry. It's not a race. If it takes you 10 minutes, then that's fine. Remember, the average person spends about 1,800 hours per year working and making their money. So I don't think it's too much to ask that people spend maybe 5 or 10 minutes a day on their trading just to make sure that their investments are going up. However long it takes you, that's how it takes you. But you'll get good at this very quickly. So lastly, just to remind you, there is something here called the rules of engagement, just an overview of what we are generally looking for. So the first one is that we trade liquid options only. And so that means typically on the ETFs and the indexes, SPY, the Qs, the Russell, we can go into bonds and gold, but anything with good liquidity we can use. So even some of the S&P 500 sector ETFs, XLF, XLU, we can use those as well. As far as days to expiration, we're typically looking about 45 to 70. That's why today's trade at 72, it's not quite there. 2 days isn't make or break. We've already got a trade open, so I wouldn't do it today. But anywhere in that sort of 25-day range is ideal. Anything inside 45 is going to decay too quickly, and the gamma is going to be a little too high, a little too susceptible to single-day shock prices. Number 4 there, I generally stick to monthly expiration cycles, but the quarterlies actually have really good volume as well, so those are okay. There's no reason to use the weeklies. We're going so far out, those really aren't there. So monthly or quarterlies is fine. Again, 15 delta. For calendars, they don't have a delta. You just go at the money or just slightly below the money. There will be a calendar video coming, don't worry. That point number 6 is going to have its own video, because if you do actually have a large trading account and you're trading something like the SPY, you would end up opening quite a few contracts. So there are actually a few tips that I can give you to significantly reduce the contract size that would match a much larger account. You don't have to open like 500 SPY options if that's the kind of size you're trading. There is a way to get those contracts down. So that'll be a full video in the future. Again, allocation sizing is there. Talked about that. 2 trades simultaneously. Stop losses. Again, highlighting that Iron Condors are different than calendars. That as well is going to have its own video. A lot of these rules of engagement are going to have a full video dedicated to explaining why. But this is there if you need it. Every cell is labeled. Hopefully I got to the point and I labeled it in something that is self-explanatory, but that's your spreadsheet. So we're just going to stay disciplined, follow the rules. And when we get our 25 trades, at that point, you can do the analysis and you can see what's working and what isn't. And over time, you just become a more efficient trader. So hopefully now you can see that using spreadsheets is actually pretty easy. So now it's just about getting the reps in. Like I said, there's 25 lines there for future trades. Hopefully you'll go far beyond 25 in the future, but definitely get those ones done. And then we'll have something to look back on to see if you actually like Iron Condors. And you'll have enough data points that you can start to form some conclusions and see the best way to trade them going forward. Far too many people out there give up way too quickly with their trading. They're just too impatient. If your first 25 trades don't go so well, that's no reason to stop. That only means it's an opportunity to roll up your sleeves and get to work on figuring out why, so you can make sure that the next 25 trades are much better. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.